Silvergate could be completely bankrupt. Silvergate was one of the first banks to enter the crypto industry in a larger way and has struggled after a disastrous 2022, with the exchange now functionally insolvent. Coinbase has already redirected many of its clients from using Silvergate to banking alternatives, and many other large companies in the industry are expected to follow suit. Companies are already scrambling to explain how little exposure they have to Silvergate. MicroStrategy, for example, has already signaled that they keep custody of all of their Bitcoin that they used to acquire the loan from Silvergate and cannot be affected by the bank's implosion. Troubled crypto-friendly bank Silvergate Capital is talking with U.S. regulators to find a way to avoid going out of business, as fears grow for the key player in the digital asset industry, Bloomberg has reported. Officials from the Federal Deposit Insurance Corp visited Silvergate's headquarters in California last week to meet its management team, Bloomberg reported Tuesday, citing people familiar with the matter. Silvergate, which used to be the go-to bank for the biggest names in crypto, said last week it was evaluating its ability to continue as a going concern. The industry favorite's finances have been hit hard by last year's digital asset rout and by the fallout from its client FTX collapse. One way to help Silvergate stay afloat discussed in the FDIC meeting was to gather crypto investors to help the bank boost its liquidity, per Bloomberg. The institution saw its deposits fall by over 50% in the 3 months to December 31 to $6.3 billion. But the company has yet to determine how to manage its worsening finances, and the FDIC officials are examining its books, the report said. Since the crypto bank's client deposits are insured by the U.S. government, the FDIC could be key to finding a viable solution to its predicament. The agency insures deposits of clients in banks and handles receivership, a process where it steps in to manage a troubled company for those institutions. Last week, Silvergate delayed filing its annual report with the Securities and Exchange Commission because it said it needed more time to look into how badly its finances have been hit by the events battering the crypto world. On Friday, the bank scrapped its Silvergate exchange network, seen as another sign it was thinking about winding down its business. The payment service provided quick transfers between investors and crypto exchanges possible at any time, unlike traditional bank wires that typically take a few days to go through. That made it a key part of the crypto industry. This SEN is Silvergate's main flagship product that previously was the key attraction for depositors to bring funds to the bank, analysts at Wedbush told Reuters. Shares of Silvergate have dropped over 60% since their close last Wednesday, adding to a slump that has seen them fall almost 96% in the past 12 months, as more than a dozen of its crypto firm customers shut down, or fired, or came under investigation. They were tipping a little higher in pre-market trading Wednesday, up 0.7% at $5.25. Silvergate didn't immediately respond to insiders' requests for comment made out of regular office hours. The FDIC directed insider to the Federal Reserve, the bank's primary regulator, which didn't immediately respond to a request for comment. What happens next? In a worst-case scenario, Silvergate may file for bankruptcy. More likely, the FDIC-insured bank, Silvergate Bank, could go into receivership. Not unlike bankruptcy, receivership acts as a protective umbrella where a receiver or trustee is appointed to take over the business with the ultimate goal of protecting creditors, especially those with secured loans. Unlike bankruptcy, receivership is not a legal action, and it's geared to protecting a company's lenders instead of borrowers, as is the case in bankruptcy. Jesse Austin, a former partner with King and Spalding's bankruptcy practice, explained that in this instance the decision and execution for receivership will be made by two banking regulators, the Federal Deposit Insurance Corporation, FDIC, or California's Department of Financial Protection and Innovation, DFPI, who could declare Silvergate Bank inadequately capitalized. If California's banking regulator or the FDIC finds Silvergate undercapitalized, the FDIC will then come in and close down the bank, Austin told Yahoo Finance. Though bankruptcy code specifically prevents a bank from filing for Chapter 11 or Chapter 7 bankruptcy, Austin said that Silvergate's holding company, Silvergate Capital, could still file for bankruptcy, especially if it has other valuable assets besides customer deposits. Along with Silvergate's SEN network, the company also owns stablecoin assets purchased from Meta's shuttered stablecoin project, Diem, in January of last year for 1.2 million shares and $50 million in cash. The crypto-friendly bank's troubles followed joint statements from January and February issued by the Federal Reserve with FDIC and OC, that warned of the volatility risks of banks that catered to crypto clients assume. In light of Silvergate's position, the statements raise further questions whether U.S. banks will become a lot more gun-shy to the digital asset industry, constraining access for crypto firms, according to a banking industry source familiar with Silvergate's capitalization. On the one hand, if crypto is going to be out there and Americans are putting their dollars into it, don't you really want those dollars to be held in U.S. versus foreign banks? This person, who requested anonymity to speak freely about Silvergate, told Yahoo Finance. Maybe it's not that if you're a bank you can't take those types of deposits, but you need to limit them by proportion on your balance sheet. How Silvergate reached the brink. Silvergate became a regional bank in 1996, but it wasn't until 2014 that CEO Alan Lane chose for the company to begin servicing crypto clients like the now bankrupt Genesis. The company carved out a niche for itself by giving banking access to a growing number of crypto startups, and the bank's offerings evolved into a formalized payments platform known as the Silvergate Exchange Network, where 24/7 operating crypto depositors could make U.S. dollar transfers and loans outside traditional banking hours. Silvergate held $1.8 billion in total deposits and $2 billion in assets at the end of its 2018 fourth quarter. By crypto's peak in 2021, its total deposits and assets had risen to $14.3 billion and $16 billion, respectively. Following the bankruptcy of crypto exchange FTX, Silvergate's total deposits and assets fell to $6.2 billion and $11.3 billion by the end of last year's fourth quarter. With that drop in deposits, Silvergate's capital relative to its assets shrank by half. This leverage ratio fell from 10.7% in its third quarter to 5.3%, a level of specific concern for banks with regulators having reason to step in for any U.S. bank below 5%. The difficulty here is that Silvergate was not a huge bank. The banking industry source told Yahoo Finance. They strategically grew their deposits by working with crypto companies, but their crypto deposits became much larger than the rest of their business.